Good day, traders, and welcome back to another weekly dose of market insights with me, your analyst here, Zain Vawda at OPT. Now we're starting off the month of December, and obviously quite a bit to get through this month. Markets generally have quite a bit to say in the month of December, a lot of things to consider, and obviously we do have quite a bit of a slowdown as we head up towards that Christmas and New Year period. So a lot to get through, guys. Like I said, this week, obviously kicking things off quite a bit on the agenda, NFP. We've heard some comments already from US President-elect Donald Trump, which have shaken markets up as well. And yeah, with that in mind, guys, I think let's get moving. We do have quite a bit to unpack. I think first we can take a look at what we do have, or what happened last week, basically, with markets, guys. And I think the biggest takeaway last week was that we did see quite a bit of a significant change when it comes to US interest rate expectations for the month of December. And obviously, we have the Fed rate decision on the 18th of December. And, heading into last week, guys, there was a 50-50, if you will, possibility of a 25 basis point rate cut in the December meeting. And, with the data we had last week and some comments from Fed policymakers, as well as the Federal Reserve meeting minutes, the probability of that has moved closer towards the 70% mark for a 25 basis point rate cut. And obviously that they're contributing to some US dollar weakness, which we saw last week, the dollar index pulling back quite significantly towards the mid 105, 105.50 area. Towards the end of the week there. So a little bit of dollar weakness there, guys, like we said, heading into the month of December. So not a surprise there. Something just to note, guys, that, historically, the dollar does perform, or, December is not really the dollar's best month of the year, down to many reasons. Obviously, we do see quite a bit of rebalancing of portfolios as the year comes to an end of another quarter as well. Also, what we do usually see in December is the so-called center rally in the US, where we do see US indices and US stocks rally quite significantly. And with that, obviously, we do see funds flow from safe havens like the US dollar and gold, potentially towards riskier assets like the S&P 500 and equity stocks. So bear that in mind, obviously, moving forward, guys. We will look at the charts as well and see what that tells us. But that was the biggest takeaway for me last week anyway. It had to do a lot with the US dollar and what we saw repricing wise there. Something else that was interesting last week, guys, we did see some more poor data out of the euro area and the UK as well. However, I think with the euro area, there was a little bit of a silver lining there towards the back end of the week. We did see or at least a possibility. I wouldn't call it a silver lining, guys, if you will, but there was a probability of a 50 basis point rate cut at the December meeting from the ECB. And that seems to be pared back a little, largely on the back of a bit of a rise in French inflation and a slight improvement in Eurozone consumer confidence as well. That might also help stave off a 50 basis point cut. But I do think that maybe the ECB or Europe in general could use a 50 basis point cut, maybe to stimulate some growth there moving forward as they continue to struggle. Let's get things moving, guys. Let me take a look at the economic calendar, if I can pull that up and share that with you guys as well, for the week ahead. And let's see what we do have here. If I may share my screen for a second, and let us get things moving. There we go. We've got the TradingView economic calendar, which should be coming up any moment. There we go, guys. Now, as you can see today, we did have a bit of data, guys. The Caixin manufacturing PMI coming in actually above forecast, guys, from China there. PMI data, we have been keeping a keen eye on that as well. The knock-on effect on that for emerging markets is usually quite significant. However, Chinese markets themselves did not react all that positively to the news and to the data. We still saw a bit of a pullback in Chinese stocks overnight, etc. And I think a lot of that, guys, came down to what we heard over the weekend, or a tweet actually by US President-elect Donald Trump. And once again, Trump, moving markets with comments and, his affinity for social media, if you will. He basically threw down the gauntlet towards the BRICS group of countries, which include obviously Brazil, Russia, India, China, and South Africa, with a lot more countries looking to join the BRICS group moving forward. Now, obviously, a lot of the talk around the BRICS group in recent times has been around de-dollarization and a potential BRICS currency, as well as an alternate system to rival the SWIFT system, all of which obviously run largely by the US, and that's what allows the United States to impose sanctions on other countries. Now, with that in mind, what we have seen, obviously, Trump speaking yesterday, or I think it was a tweet on Sunday or late Saturday, if I'm not mistaken, where he basically said that, any countries looking to de-dollarize and, come up, or if BRICS looks to come up with a alternate currency, then those countries could expect 100% tariffs. Now, obviously, this led to significant dollar strength as markets opened yesterday. Dollar index surging back above the 106 handle from the mid 105.50 area. But I think it does require a little bit of foresight here, and maybe a little bit of might require us to just take a bit of a pause here. I think there has been a lot of optimism, a lot of excitement around President Trump coming back into office, particularly around for the United States and US voters, given what they consider a poor period over the last 4 or 5 years, a lot of unhappiness around the Joe Biden presidency. However, Trump has proven, even in his previous term, guys, that he does take a very aggressive rhetoric. He speaks rather aggressively, and he has a tendency to basically run his mouth sometimes before he knows what the implications are. Now, as we discussed at the beginning of last week, the appointment of U.S. Secretary Treasury Scott Bessent was viewed by many as sort of a counterweight to Trump's, ideas on economic policy moving forward, a lot of which has raised eyebrows. And I think this is another one that might raise eyebrows moving forward, guys. The idea of 100% tariffs on countries like China, especially who, are manufacturing economies compared to the United States, which is no longer a manufacturing economy and is more a service-driven and consumer-driven economy, means that the US will not be able to just produce its own goods. If they do slap 100% tariffs, we have seen, this reciprocated in kind in the past, in previous eras as well. This has been an issue. So if this does come to pass, then obviously the potential for tariffs back at the US will obviously increase as well. And then that will be, increase the cost of living for the everyday American in the United States. And what that might do, obviously, is put pressure on President Trump as well, as one of his, one of his policy points in his election bid was around, improving the economy, improving inflation in particular. And, like I said, guys, I'm one that, I don't want to get too drawn into the political side of this. However, like I say, it is a complicated matter. There is a lot of variables to consider when one talks about tariffs. And it's really going to be a very interesting 2025, given what we have heard already. But yeah, just with that in mind, guys, at the moment, we are seeing a slightly stronger dollar as a result of that. And like I said, we did have some positive data as well from the US, with the ISM manufacturing PMI also coming in slightly above the forecasted figure. Now, for the rest of the week, guys, there is some important data, but I think the main data point that will be focused on this week, particularly from the US, is going to be the jobs data on Friday, the non-farm payroll and unemployment rate data, which should either confirm or add further uncertainty around the Fed decision on the 18th of December. Around the rate cut. Now, non-farm payrolls, forecast to come in here at 195K. The unemployment rate forecast at around 4.2%. Now, I do think if unemployment remains at 4.2%, and if labor data does come in as expected around the 190K mark, 200K mark as well, in these areas close enough to the actual forecast, then we could get a confirmation, or we could see a little bit more dollar weakness as markets might price in a higher probability of a rate cut at the December meeting. And I do think that that is a very real possibility at this stage. We have heard some comments this evening from Federal Reserve Atlanta President Raphael Bostic, who says he's still not 100% convinced of a cut. He's still not sure. He's still debating. However, he did mention that he does find current rates to be restrictive as well. So a little bit of a contradiction there by Raphael Bostic. So it'll be interesting to see how that meeting plays out and whether this non-farm payrolls can provide any more certainty around that and what that might do for the US dollar. But yeah, guys, like I said, I think a lot to unpack today. Like I mentioned, non-farm payrolls is going to be key towards the back end of the week. We do have Canadian data as well, and a speech by Fed Chair Powell on Wednesday that also could shake things up a bit and might give us further insights into where the Fed currently stand. But yeah, besides that, guys, I think it's time we move on to the charts. So we know how much, that's one of the reasons why everybody's here, so we can get some insight into the charts. And as you guys can see, dollar index, guys, like I mentioned, this is a blockbuster start for the dollar index here. at the month of December. However, historically, as I mentioned, guys, the dollar index, not really its best month in December. So maybe bear that in mind as we approach this key 107 level. There is some resistance potentially here at 107.50, given that we did top out here 3 days consecutive candle closes, or not closes, but 1 day close, and then the 2 day opens here, refusing to budge beyond that 107.50 handle. So that could prove a key level as well. And then obviously 107.97. But for now, guys, like I mentioned, 107, first point of interest here to pay attention to, and to see whether the dollar index can maintain this excellent start that we've had to the month of December. I mean, just for the day here, up 0.63%, which is quite a good start for the month. So it'll be interesting to see, obviously, the dollar playing a key role, driving, Euro USD, Great British Pound USD, oil prices, gold prices. So definitely been key over the last couple of weeks, and I expect that to continue heading into the festive season. Quickly over to Euro USD, guys. Today, flirting a little bit here with the 105 handle, and Euro USD now, the euro struggling with its own issues, guys, and this obviously helps the dollar index as well, given that the euro is the main contributor of that index. But at the moment, France is going through a potential, there might be, the government might collapse effectively in France. At the moment, they are unable to find consensus around the 2025 budget for France with the I think it's the Marine Le Pen's party in France, National Rally, if I'm not mistaken, at the moment, saying today as well that even if the so-called left-wing party in the French parliament there, or French government, decides to propose a vote of no confidence against the current Prime Minister Barnier, that the right wing or the National Rally Party or Marine Le Pen will support that as well. Times are looking really tough there when it comes to Mr. Barnier there, the current French Prime Minister, and it looks like he might not survive tomorrow as things stand. He did try and push through the budget today using a special consideration, I believe it was called, that he's allowed to do. And that obviously has just made things worse. As we can see here, the French, as they called here, Marine Le Pen's party here, saying that they are still remaining red lines on social security budget, namely pensions. This obviously was not addressed during the rest of the day. And then we did here's it here, French PM Barnier to use special constitutional powers to adopt social security budget bill without parliament, obviously. And that now looks likely to, see Mr. Barnier obviously be, vote of no confidence be brought against him, and he is likely to lose his seat as Prime Minister. Now, that obviously could have some impacts on the euro today. He did hold the euro back slightly, obviously that coupled with some dollar index strength as well. But as you can see, guys, the euro last week tried to make a run for it, but the 106 handle continues to keep bulls in check there. So for now, 106, and then obviously 107. You guys can see these pink areas I've drawn up here. I still do think these areas are going to be key moving forward, and we do obviously have this descending trend line that might come into play. Looking at cable, guys, cable as well, quite a pullback today, a little bit of a gap down on that stronger dollar as well. Cable struggling to take out this 127.50. At the moment, the risks to the downside are stacking up here for cable. The only positive, obviously, as it stands, guys, is that looking at the longer term impact and the potential for cable, or potential for the UK to cut rates further in 2025. At the moment, it doesn't seem like they will be cutting all that much as things stand. I believe pricing to the end of 2025 between the Federal Reserve and the Bank of England is kind of similar, with around 77 basis points of cuts predicted. And if that does come to pass, then obviously there is no rate differential issue that we might get when it comes through to some other currency pairs here relating to the dollar. So that might benefit the pound in the medium to longer term. So something to pay attention to as well. USD yen, guys, this is a really interesting chart. As you guys can see, we have broken this long-term or this medium-term descending trend line from the 16th of September when this rally to the upside began here from around the 140 or just below the 140 handle. And we obviously rallied all the way up to 156.50. Before now, we saw this sharp sell-off. There is growing consensus here that we are going to get a rate hike from the Bank of Japan at their December meeting. And as markets are pricing it at the moment, it's quite significant. I believe it's around the 80% probability for a 25 basis point hike from the Bank of Japan. And we have heard some bullish or some hawkish comments, if you will, from the Bank of Japan Governor Vawda as well, which, adds further strength to that. So we might continue to see some Japanese yen strength for the remainder of December heading into that meeting, depending on how things pan out there as well. Gold, interestingly, this morning, guys, suffering a bit, obviously, with that stronger dollar. Gold pulling back down towards the 26-24 support area that I have marked off, just dipping slightly below what could be possibly a potential double bottom here, guys, on the daily chart. And if that is the case, one wonders if gold is set for a new bullish leg to the upside. Now, I think the one concern I would have is that the monthly close this past month on gold was the first bearish monthly close, I believe, for 2024. Yes, let's see. No, January was a bearish month as well, guys, with a slightly bearish month. However, since then, we have been bullish. We did have one doji close in June as well. However, this is the first real bearish month, quite significantly down, nearly 3.5% gold. So on the monthly chart there on gold, this was the first one significant pullback we have had this year anyway, since we did have this explosive rally. So it will be interesting to see, guys, how gold plays out over the coming days. Now, as you guys can see, I do have quite a bit of support and resistance marked off here, initially 2650. And then beyond that, we could look at 2674, 2685, and then 2700 to the upside. Downside, I'm looking at potential 2600 serving as some form of support. And then I've got 2575, which is also the 100-day moving average, guys. And then we have this ascending trend line, apologies, the outer trend line running here at the bottom, which kind of lines up with around the 2550 mark. So something else to pay attention to there. Now, just looking at US indices, guys, and this is something I think that might present some opportunities in the month of December. So bear that in mind. You know, like I mentioned, we do get the center rally usually in December around US stocks. So something to keep an eye on as well. US stocks generally tend to perform quite well in the month of December. So keep that in mind. NASDAQ is approaching the previous all-time highs here, guys, around the 21,253 mark. And then a break beyond that. Obviously, we don't have a lot of support or resistance on the upside, guys. So it's very difficult to look at in terms of, you know, technicals and what might transpire here. Beyond that, I think I'll be focusing more on whole numbers as I go forward, 21,500 maybe, 21,75, and then maybe 22,000. Initially might be areas I will keep an eye on. The S&P, at least I do have an idea for a target, guys, in my mind anyway. And this is based off the technical triangle pattern breakout, which we had already from September. This was a massive triangle pattern. And the overall targets, I think at the time, guys, I had written about this. As you can see here, we had 59.10 and 61.70. That's based on how the triangle pattern breaks out from a technical analysis perspective. And with that in mind, guys, we have already tapped 59.10. We broke above it, went all the way up above 6,000, came back to 58.50. If you will, 58.40 before rallying back now and printing fresh all-time highs again today. Another high today around 6,046. Now 6,170 would basically complete the triangle breakout pattern. So the potential is there for a rally up there. However, that would require quite a significant move from current prices. So yeah, will be something to keep an eye on for the rest of the month. But yeah, as I mentioned, really keep an eye on US stocks this month. There's definitely potential there. Historically speaking, the S&P does enjoy a very good December, and even more so in US election years. So bear that in mind. But yeah, I think that's the wrap for me, guys. Quite a bit, like I mentioned. Apologies if I gave too much info out today. I hope you guys find it useful, and I'm sure you guys will be back to tune in for another one of these weekly dose of market insight videos soon. For now, trade safe and catch you soon.